let's skip the normal intro and dive right in because there is a lot that happened in the month of October. So mortgage rates increased. This was as of a week ago when I put this together. It has been delayed. Normally, this would have come out in the middle of October. Here we are on the 24th. Rates have actually jumped up even further since then. So we are now seeing 8%, 8+% on loans that are conventional. So that's not a jumbo loan. That is less than about $800,000 in loan value. You're likely looking at 8+%. Even jumbo loans, you would have to get an adjustable rate mortgage, 7/1 ARM, to even touch in the sevens at this point. Sixes are gone. So things have definitely gotten a little bit tighter, and inventory sitting at 251, up 5%, is normal for this time of year. But I don't know how much higher we're going to see, and I'll dive into that in a minute. If you are one of those waiting for more inventory to come to save the day, I would not hold your breath. Days on market still is stable, and prices, this is where we are starting to see some change. So condos are still going up year over year. They're 15%. That's a little stronger on paper than I think you would expect to see in real life. If you were to compare identical properties where they were last year to this year, not quite 15%, but certainly higher than we were last year, most likely closer to 10%. Single family homes, we have seen decline. Now, there is rationale for that, which I'll get to. Get my head out of here. So first, new listing wise, we normally see roughly the same amount in September as October. If you go back and look in history in 2022, that is what we saw. In 2021, that is what we saw. 2020, different ball game. That one we throw out. But even back in 2019, just a few less in October than we saw in September. So this is normal. And again, if you've been watching these videos, you have heard me say a million times over the past year or so, we are trending towards a new normal, trending towards balance. We've hit that balance. I think we're a very delicate balance, but balanced market nonetheless. Pending sales continues to reflect that. Normally, we would see, if we go back to 2020 and earlier 2019, we would see exactly what we saw here, a decrease in October of homes that went under contract compared to September. And what we're really seeing is almost identical to 2022 in terms of trends. The numbers aren't identical, but in terms of what we would have expected to see based off of last month, the month prior, we're trending almost identical to 2022. And if that's the case, right, if we're seeing a repeat of the activity that we had just a year ago, that again reinforces the fact that this is where we're likely to stay. And we can even potentially use 22 as a trend line, because what happened last year, if we just sum up 2022, things started super cheap, mortgage rate wise, they doubled through the fall. And they've basically been around there ever since. Obviously, yes, they came down a bit in 2023 in the beginning. They've since spiked again, but we're on the similar trend line there. And if they hold, or if they go down, as some people are predicting once we get to 2024, we would expect this pattern to repeat. We would expect similar levels of activity because motivations aren't really going to change. And what I mean by that is sellers are only going to sell if it makes sense. And if they're cashing out, they're going to cash out no matter the market. If they're doing so to upgrade, to upsize, downsize, closer to the beach, get to the bay, whatever the reason is, financially it needs to make sense. And if the picture hasn't gotten better, meaning if mortgage rates have not gone down, then we are going to have to wait until they do to see the normal level of activity for current owners here. Now, months of inventory, again, trending around 6 months, which is a balanced market. I anticipate that we do maybe see an uptick over the fall for a few months before we come back down in the spring. But all in all, that is normal. That's what seasonality does to these statistics and the data points. So here's the big one. If that caught you on the first slide, that we are down 6% year over year when it comes to single family homes, you're seeing it here with the picture. This looks, right, like it's going to continue to go downwards. That is simply not going to be the case. I've said this on the past few market updates. We're going to moderate between 1.5 and 1.6 million, depending on the month. Which is a stable, very solid number. And as rates do come down, when they come down, whether it's next year or the year after, nobody really knows. That's when things will start trending back upwards definitively again. And days on market, again, basically back where we were pre-pandemic, which doesn't show on that chart, but trust me, it is about the same as we had in 2021. Now, months of inventory for condos and townhomes, we're sitting around 5. Now, I expect that to trend up towards 6. The condo market has been stronger than the single family market because it's more affordable, simply put. I expect it to stay that way. And because it's more affordable and because the demand seems to be much stronger there than with single family homes, despite the inventory difference between the two, our sales price continues to creep up. I expect that to be the case again going forward once we wrap up the month of October. Days on market, still very low. And again, you're seeing here the difference. If you look at this compared to what we had for single families, we are back up to where we were at 2021 with single families, around 65, 70 days. Here we have not even come close because the demand is still extraordinarily strong in that segment. So what's it all mean? Where are we going? Mortgage rate wise, it's chaos right now. And depending on the day, they're up, they're down, they're sideways. This is the time where you really need to have a relationship with a lender that you trust, that can give you the details if that's what you want, right? Why things are moving the way they're moving. But shopping rates becomes even more critical. And that is something that I pride myself on, is having relationships with a ton of lenders, all of whom I trust to get the deal done and to get the job done, do it well. But ultimately, who's going to have the best rate for your specific scenario? You don't have the time of day to talk to 20 plus lenders to try to figure that out, have your credit hit each and every time. But these are people that I work with consistently, and am kept informed of what the rate situation is, what the product is that would be best, based on what I may or may not know about you. So this is the time to really buckle down and try to figure that out if you are looking to buy. And rates, again, will they come back down over time? They most certainly will, but you shouldn't expect to get to the 3s and 4s again. 5s, maybe 6s is where the general consensus is that things will return to. We don't know when that will happen. 2024, there are bets in the betting markets that things will come down at least a quarter to a half a point, the Fed funds rate. That would ripple through the bond market, ripple through everything, and eventually hit the mortgage rates, that should potentially get us back in the 6s. So 2024 may be a good time to get back in to the swing of things. But again, if you wait until that happens, other people will be doing the same. And if inventory does not increase, competition will return, which is not really what anybody wants to see happen, trust me. Inventory wise, again, a 5% increase from September to October is normal based off of what we've seen. We normally spike in October. Now, a decrease that we saw in homes going under contract is definitely higher than normal. But again, it tracks very closely with what we saw in 2022. Normally, it wouldn't have been that drastic of a difference. But again, if we're going to have a repeat, we're going to have a repeat, and all signs continue to point towards that. So if we're going to have a repeat, inventory wise, I hit on that in my post today in the Tips for Buying an OCNJ Facebook group. And if you're not a member of that, link is down in the description. You definitely should check that one out for a lot of tips beyond the videos that I put out. What we really expect to happen inventory wise, if we saw a repeat of last year, would be about another 10% increase in inventory from the end of October to the end of the year. That would put us about 275 active listings on the market. And if that happens, that's not game changing, right? That is not going to be enough to put pressure on sellers to drop their price substantially. And a lot of the sellers who are out there are not must sell people. That's not how this market works, right? That's normal that most people who are selling are not must sell individuals. That doesn't really give you the leverage that you think you should have as a buyer. Because of those situations, the motivation matters. But over the next 30 odd days in November into December, that's when the real sellers will show their colors. But again, if you are looking to buy something and you have your eye on a property, you definitely want to be poking before you see the price reductions, because once that happens, you may have missed your opportunity to avoid competition and secure a value. So my dedication over the next 30 to 45 days is honestly to have conversations with these listing agents to get a sense for who is most likely to have some wiggle room there. It's not something that they can disclose, but again, I can read the tea leaves better than most. And I already have my eye on a few properties that I know to be a good deal if somebody is simply interested in them. So if you want that little short list, I can't make a video about it. I don't have permission to say any of those things, but I can have those conversations direct with a client. So if you're curious what those big value properties are, call me, text me, email me. I'd be happy to discuss with you. All that's in the description as well. So price wise, again, I'll let you read this. I would recommend you pause and read it if you really want to see every word. But I don't expect to see prices dropping too much. Should we see some of those real sellers dropping their prices? Yes, certainly. Is it a quiet market overall from a buying standpoint? Yes, it certainly is. But once again, that is a normal phenomenon this time of year. It feels, I'll be honest with you, it feels a little slower than normal. And I'm not surprised, right? We have a war going on now, Israel, everything going on over there. There's a lot of uncertainty. So this is not a normal time. And normally that's when there's opportunity, right? The Warren Buffett quote, the famous, when everybody's scared, you should be greedy. When everybody's greedy, you should be scared. So people are scared right now. Nobody's being greedy. So again, I'm buying a house right now in the middle of all of this. So I understand that there are hesitations, that there are fears that go along with this. But again, I can empathize because I'm doing it too. So the next 60 to 75 days max are really prime time to find values. So if you are looking for values, that's the time to shop. Put me on the case. I'm happy to get to work for you and bring you the details on what are the real deals. And days on market, again, I don't think we should expect much of a change there going forward. So all my contact info is right here, again, as well as down in the description. But if you have any questions, you can always put them right down in the comments or reach out to me any way you see fit. I'm happy to be a resource for you, give you the details, data, confidence, education, whatever it is that you need. Just start or finish your process, whether this is something you're looking to jump on in fall of next year, spring of next year, or you're ready now. Happy to help however I can. So thanks for hanging out as always. I will see you next time.